All right, quick audio check here. We'll get started in about a minute or two. Just let me know, anybody, that you can hear me okay in the comments area, and we will get started. Welcome. All right, well, good morning, everybody, and welcome to Stock Analysis Friday. My name is Bennett McDowell with TradersCoach.com, and today is August 11th, trucking on through the summer here. All right, let me go through a few administrational items before we get started. Feel free to type in any stock or ETF symbols that you have in the comments area and type those in caps, and then I will get to those and we'll look those up. All right, so far last week we had some pretty good picks, so let's see what we can uncover today. All right, few administrational items. I have to start out with the risks involved in trading. Like I always say, without those risks, there is no opportunity. So the two really go hand in hand. But you need to be aware of the risks, and you also need to learn how to protect yourself as best as possible from that risk. We cannot take the risk 100% out of any trade. We deal in a realm of probabilities. Past performance does not guarantee future performance. And therefore, you need to basically trade and invest with money you can afford to do so, called risk capital. Also, too, if you need help with trade size or calculating your trade risk, so you know how much you could possibly lose when you take a trade, we have several books on that, and we can help you with that as well. Now, the other thing, too, is make sure you check with your financial advisor or money manager to be sure that any of the stock picks that we may recommend or talk about are suitable for you. We don't know your personal situation. They do, and a lot of factors go into that determination. All right, here's several books I have. You may want to focus on the Money Management for Traders books. Those are great on learning how to control your risk. My brand new book being published by Wiley is called The Art of Trading, second edition. This is going to be, I think, the best book I've written. We're putting a lot of new material in there. Good material on today's market, as well as a lot of material on our software, since our first book called The Art of Trading came out back in 2008. So we've been around the block for quite some time, but this book is going to be a great one. We also have Elliott Wave Techniques Simplified. That's on a form of technical analysis. You'll probably see me use that today, and it's on the Elliott Wave. So if you want to learn any more about that, that's a good place to go. And then the Survival Guide for Traders basically is a great reference manual for all you traders and investors out there. And it talks about specific terms, but also the type of technology that you need in today's market in order to run your trading business right out of your home like a professional hedge fund. So business plans are in there, the whole 9 yards. All right, now that takes us to our suite of software tools. So we have tools that give us entries and exits. That's the top row. That's the ART, ALP, PTF, TLM, and ERI indicators. You're going to see that when we look at charts. We also have scanners on the second row. We probably won't be using those today because you'll be typing in your symbols. And I see, Jim, you're already going at it. I love that. Okay. And then also at the bottom, we have risk control software. So we try to cover with our software tools all the major areas that you need to have covered before you can be proficient in this business. It's not just about entries and exits. It's about trade management. It's about finding those stocks or ETFs or futures, whatever you trade. And it's also about risk control. So you have to be able to combine and use all those aspects, which we call kind of the trading pie, in order to be successful at this business. So we'll show you how most of those work, especially the charting software. All right, give us a like right now. Stop whatever you're doing. Give us a like right now, because if you don't do it now, you might not end up doing it later. So do it now. And that really helps us apparently get into higher standings on YouTube. So take a minute right now and give us a like. Really appreciate it. And with that said, let's go ahead and dig into the charts. Okay, here we go. All right, so we're going to take a look at USO for All right, I'm back, folks. Looks like I got kicked out for something. Give me a second because I have to restart some of my software. So I'll be right with you. Okay, well, I'm getting set up here. Looks like we have some type of issue with the software I use for the slideshow, I think, and StreamYard, which is what I use to do our webinar. So I'll have to get a hold of them and see what happens. We had this happen last week too, so I'm really not exactly sure what the conflict is, but I will have them take a look at it and see. It's kind of a pain because what it causes me to have to do is reboot my computer, reboot all my software, and that's why it takes me about 10 minutes. I appreciate you guys hanging in there. But we're traders, right? We're tough. We can do this. And as soon as I get booted up, I'm going to jump in and start looking at Jim's stock, USO, and UNG. And then we'll take it from there. Should be another few minutes just loading data into my trading platform. You guys can hear me, right? Okay, good. All right, just a couple more minutes and we'll be with you. I'm going to go ahead and show my screen. And I still have to give it a minute to load up here. Okay, should be back now. Give it one more second to load data. All right, here we go. All right, so let me just start out with the S&P because I got to give it a minute anyway for all the data to catch up. So here's the S&P, and basically the red line at the top indicates the all-time high. All right, so that occurred back in late 2021 to early 2022, right around that time period. Market has not gone above that. It's tried. It came close, but so far it has not been able to do it. Now we're getting a pullback in the market a bit. NASDAQ is down 122. We've had kind of a little bit of a bearish early for the pretty bearish week overall, I think. Kind of a little down, a little up, but mostly bearish. We got the Dow up just 58 points now. So I think what's going to happen here is I think we're going to get a pullback to about probably on the S&P to around 4,000, and which is basically an inflection point of where the market should pull back. And then from there, the market's got to make a decision. It's either got to go bounce off that and go higher, or it's got to have follow through to the downside before we can say this is a significant bearish move that's developing and not just profit taking. So that's kind of one of those things that we always determine when prices get to inflection points. So I'm looking at 4303 to 4110 on that as a possible pullback. The owl, which is one of our indicators here, is almost going red. So if that goes red, that will confirm that this is a profit-taking wave that will probably get down to that target zone, okay? So that's kind of where we're looking there. All right, let me type in USO. It's still loading data. Let me give it another minute here. And let's see what we got here. Yep, still loading. I have so many symbols, so many stocks that it takes a while for all these to get loaded up. When you get a crash like that, that's why it takes me 10 minutes. Okay, okay, Albert, I see your picks from Jean. She just forwarded those to me. Thank you. And we're just waiting now for USO to load here. This is a good time for everybody to type in stocks now while you are waiting for me to get to these. All right, data's coming in. All right, so I've got three charts up here. The chart on the left is a 60-minute chart. Chart in the center is a daily, and the chart on the right is a weekly, and they all are focused on the same symbol. So in this case, USO. All right, so once again, USO is the ETF for oil, crude oil. And we are actually bullish on this. We talked about this one last week as well. And the target on this for us short term is 99.70 up to 125. All right. Short term meaning probably getting up there within the next 6 months or so. Now, if you look at the 60-minute chart on the far left, right over here, this is a big move up without too much of any type of pullback, right? So it's extended. It is very extended right now. And because of its extension here, I'm kind of thinking you might want to wait for the pullback before getting in. And so if we take a look at what that number of the pullback could be on this, let's draw some fibs here. And I would imagine we'll get a pullback to this inflection point here. And we're probably looking at 69.92 to 66.56. And it's currently at 74.54. So if you go in now, you got to expect that. All right. You can put your stop under 66.56. So put it under the bottom of this. Probably this price bar here would be okay. But I wouldn't put it any closer than that, because if you go in now expecting to get up to that target zone, you got to give the market room to breathe. And this is basically a breath that I think will be coming. So keep that in mind. Could it make one more high before it decides to pull back? Sure. All right. That's the only reason why you'd want to go in right now, is in case it pulls up even higher. But probably best to wait for the pullback. So I'm bullish on USO. All right. I liked it earlier as a buy. Right now, I would put it on a watch list because I think it's going to pull back and you can get in at a better price. Okay. That's kind of what I'm thinking on that. All right. Let's take a look at UNG, which is the ETF for natural gas. Now, this is one I'm keeping a close eye on as well, Jim, because we've looked at this before. And, you know, basically classic bottoming here that I think is occurring here. Notice we've been stagnant for a while. So that's pretty classic. Now, we had a breakout on this, and I'm going to magnify this up so you can see it here. But we had a breakout. We were kind of watching this price bar support area here and then here, right? So we had a breakout, and now we're getting a pullback in. We have green here on the PTF, a little bit of red here. So I'm thinking here, if you put your stop under here, I think you'll survive the pullback, even if it comes a little bit more. And then I think it's going to surge forward. Now, for those of you not in it yet, if you wanted to wait for it to clear this area here to ensure that you're getting in when it breaks out, you certainly can do that. If you want to get a better price and go in here now, okay. All right. I don't see a problem with that as long as the PTF, which is on the 60-minute chart, is green. Now, when the PTF's green, that has a 75% accuracy of indicating that this is just a pullback and prices should return and take out the high. So that's basically what that's saying. So with that kind of indicator indicating that, I would say you can go in now. So let's put UNG again this week as a buy. Okay. So I'm liking that still. Markets breathe. They go up and they come down, right? All right. Let's keep going here. And FFIE, FIFE. Well, I haven't looked at that one in a while. I have traded that before. All right. So Albert, this is for you. Okay. Now, this is a good one to look at. So I'm liking the fact that we're near a bottom, right? I mean, look, boom, you have bullish divergence here. All we need is a breakout, right? All right, so let's take a look at this. So let's go down to the daily chart, which is in the center. And notice this right here. The PTF is red. That's indicating there's a 75% probability the bottom is not in yet. So I'm not going to go long on this. And you also have that backed up by the 60-minute PTF too. So I would put this on a watch list, but I would not do it. Do not go in right now. Let's see if it makes another low. That indicator, the PTF, has to be either yellow or green to take a long trade. So I would not take that yet. Okay, that's FFIE. All right, SWN. Let's take a look at that. SWN. Okay, so this has been trending up for quite some time. All right, this is looking good, except for the fact that it's due for a pullback. And that's kind of what this indicator is saying here. So you've had a number of our pyramid trading points. So if you were going to trade this up, your stop would be sitting right here. You know, the first entry is here, okay? And then what you do is you trail your stops up under the pyramids. That's how they work, because they represent fractal trend trading patterns. So you want to put your stop one tick under the bottom of here. I would not go into this now, not with this red coming here. We're going to get a pullback, probably down. Let's see what the inflection point on this could be. Let me just draw some fibs. I'll just draw these right on the daily chart. And we'll take a look at what this pullback area could be. So you're thinking, I'm thinking probably, get that a little more accurate. Okay, probably in that realm of between 596 to 547. So what I would say on this is don't buy it now, wait for the pullback, and then go in. Now, if you're long already and you want to get out here and go back in there, you can certainly do that, okay? If you don't want to bother getting out, make sure your stop is way down here, below 547. I'll leave that up to you. All right, let's take a look at CX for you. All right, CX again, nice long trade. I would not go into it quite yet, because you should have been in it already. Problem is here is a much more risky entry than down here. So this is probably also getting ready to come back at some point. It might make one more quick high before it does, but it's on borrowed time. Okay, so don't do this one either. If you're long, okay, you can put your stop under this pyramid here. But if you're not in it yet, hold off, okay? Maybe take a look at it after the correction. All right, let's take a look at CLF. All right, give that a second. Okay, let me take a look here. Okay, so here's CLF. Let's see what we got here. A little bit messy, isn't it, on the 1 minute? Definitely still coming down on the 60-minute. So you got a red PTF and red owl there and red pyramid. So short trade, short term would be that. Now you have a green PTF. So after this retracement occurs, then you're going to have something I think better. Okay. So I would hold off on this one too. I don't see a trade opportunity right there. All right, Alexander, let's take a look at Disney. Okay, so Disney is starting to pop up. I think you might have found a fairly decent one here. Good job. All right, so no longer a red PTF on the daily chart. You have green on the 60. That's good. You have a nice early entry off this pyramid. Okay, so you have bullish divergence on the owl on the weekly chart. So I'm kind of thinking here that this is going, I'm going to recommend this for an early entry. I'm liking this. And I want you to put your stop at the very bottom of this level here. So right in here. So if we bring up the data box here, let's take a look at that. Put it right at the bottom of the pyramid stop, which would be 85.45. So 85.44, one tick under there at least. You want to give it a couple ticks, that's fine. All right, now, whatever your trade size calculations turn out to be, cut it in half because you're technically going against the long-term weekly chart because that's still showing a bearish trend. So we're trying to get in early here for a bullish move to the upside. And I'm thinking here that we could possibly see two types of targets. So let's just take a look at that. First major target on this certainly could be all the way up to 123 to 148, and we're at 90.07. A very short-term target on this, so this is where we shoot for first, would be up to 97 to 105, okay? So once it gets to the short-term target, let's see how much strength it has. Maybe we scale out a little bit, and then keep the rest of the positions on for the higher target range, okay? So you got to keep an eye on that. So I'm going to put Disney DIS down as a buy. Okay, so, and you heard that from Kramer. Oh no, maybe we should put it now. Now I need to remove it, right? I had a friend of mine that watched Kramer, said every time he took a trade, he lost money on it. All right, so let's see, but that one looks pretty good. Okay, so let's say DKNG, DKNG. All right, so here's another one that's popped up. And let's see how much history. Not much history on this. I don't like these that only go back a couple years. Can't get a really good Elliott wave on the weekly chart on that. But it did go all the way up and all the way down, and now it's coming back up. We got a bearishness on the 60-minute chart. Let's hold off on this one, but bring it next week because it may actually be a decent buy at some point. But I think to get in it now is getting in it during a pullback, and I think you could probably get in at a better price. This pullback, I think, is just starting. So I think it's going down to 25, roughly to 19. Okay. All right, there you go. Okay. All right. Let's see what we got here. All right, General Electric, GE. Let's take a look at this is for ag. All right, GE. See what's cooking on old GE. All right, so let's see, General Electric. All right, I'm not sure if you're long or thinking about it, but if you're already in it, let's see what we want to do with this. Okay, so you've had a nice big move up the entire year on General Electric. You've had an extenuated owl. That's a long owl. You've got on the weekly chart, you've got kind of an interesting situation where GE pulled back and now it's pulling out. Let's see, it looks like it may have broken that upper area. Let's just go to the data box and take a look at the high here. 117.96. Let's take a look at that here. All right, so it went above the previous highs. That's kind of a breakout. All right, so what I think is going to happen with this, you're probably going to get a pullback into the 90s and then a resumption of the trend to the upside. So I'm thinking maybe you might get one more high. You got a green PTF on the 60, but you're playing Russian roulette because, it probably, if it makes one more high, what's it going to go to? 119 maybe? And we're at 114, so not too much. Maybe 120. Okay, so I would let this thing correct, meaning profit taking off this leg that's been going on all year. And if it gets down into the 90s, take a look at it then. We'll draw a pencil in a extension. So if this is the high on this leg, it's probably coming down to between 98 and 86. Okay. So you kind of want to be careful. Now, if you're long and this is not an investment and this is a trade, I would probably get out here at the pyramid, wait for it to correct. So that stop here would be right under here of 111.93. Okay. So that's kind of where I'd put it. All right. So that is General Electric. Let's take a look at Apple. All right. Classic example. Almost looks like GE, but with the correction occurring, right? So this is what I think is going to happen to GE. Okay. So if we take a look at this and draw in our retracement area, it's probably going to work its way down to 170 to 152. The pyramids have done an outstanding job of trailing the stops and keeping you in and getting you out at a higher price of around 185. So if you'd gotten in early, nice trade. Okay. All right. So what do you do now? Wait for it to correct and then go back in. I don't think I would short it here either. So I think we're seeing a correction. Now, is this going to return and make more highs? Well, let's take a look and see what happens when it gets down to the corrective inflection point for profit taking and see if it rebounds after that. If it doesn't, then stay out. All right. Good one to look at. But that's exactly what I think is going to happen possibly with GE. All right. So it's much more risky. You know, it's much more risky when you get up in a market near the top than in the bottom because of the fact that it's due for profit taking. Disney and the mouse. Hello, Thaddeus. All right. Did I miss anything? Let me just see what I got here. I think I got them all. Okay. I want to take a look. Let's take a look at TLT for a minute. Now, TLT is the ETF for bonds. And, you know, a lot of people, a lot of pundits, whether you're on YouTube or not, are saying, you know, the bonds are going to be due for a major move to the upside, especially if they think stocks are going to tank. And I don't disagree with that, but I would not be buying it here. And this is where technical analysis and our tools can be so important. So there's many pundits that are in TLT and we held off. And the reason we held off is because of the red PTF, especially on the daily chart, as well as, of course, the weekly chart. But now the PTFs also turn red on the 60-minute chart. So this PTF here was saying that this bottom down here, all right, has a 75% probability of being penetrated, which means that the bottom's not in. So while I think the thinking behind getting TLT is ultimately going to be correct, I think getting in now is a mistake. You know, everything in life is timing, right? So wait on TLT until the technicals and our software indicate a buy. This is why I say having the right tools is absolutely critical. You know, if you buy, if Kramer suggests something to buy or one of your favorite pundits suggests something to buy, look at the chart, apply the correct tools, and then you'll be able to say, well, is it a good time to buy or not? And the technicals don't lie. Okay. They are right there smack in your face. So I would say always check any recommendation with the technical tools. All right. So let's keep going here. All right. So Eleanor, STRL. Let's take a look at STRL. Okay. So STRL. All right. So again, fabulous trade. No question about it. But what's the problem with this now? The higher this gets without a major pullback yet, the more risky the trade is, right? Okay, the more risky the trade is. So that is an issue. So if you're long on this, I'd put your stop right at this pyramid down here. Now, a couple things I do, all right? So the PTF is still green here and still green here. So you don't want to bail entirely here. So your stop for all your positions needs to be right at this pyramid here. So let's just show up with a data window here. So we're looking at a low below that pyramid. Let me just focus in on that. So our software, which draws these triangular fractal pyramids, is indicating that that bottom price bar is a key support level, and your stop should be one tick under that. So that's a 59.81 stop for all your positions. However, take a look at the 60-minute chart. The 60-minute had the PTF just turn yellow. So you could also have a trailing stop for a small part of your position and scale out if it goes below that pyramid there. So there's many different ways in which we can manage the trade. We can take a scalp when the lower time frames indicate it might be a good idea to do it, and then keep the rest of our position based on the longer time frames. There's no question that this is going higher. There's no question about that. The only problem with this at this particular point is it's starting to set itself up for a moderate top here, which means you're going to get profit taking. And if that occurs, if you get in at these levels, you're going to get stopped out. All right, so you got to be careful here. So I probably wouldn't recommend this right now, but if you're in it, great job. And your stops should be set just like I talked about. All right, good, excellent. Let me go back up. That was for you, Eleanor. Okay, SHAK. And again, if you want to go long on STRL again, wait for the pullback. You'll get it. All right, SHAK. Let's see what we got cooking with this one. All right, it's kind of in the pullback area here. Okay, tried to make another high here, kind of double top there. We got red on the 60-minute chart. So we're in pullback mode here. So I would let this thing pull back, and then let's take a look at it next week. All right, let's see. Question coming in. What do you think of buying and shorting the same stock at the same time and do a writing covered call and do the opposite? I think selling a put. What do you call that? I'd call that a lot of moving parts. All right. All right. So the only time I would be long a stock and short a stock is if one of the time frames that I look at indicate one direction while the other indicates another direction. And there has to be enough profit potential on both directions for me to take a trade. So I think it gets a little convoluted when you start doing that kind of stuff. You know, you have to know the direction overall of the market, even when you're doing options for the most part. So I'm kind of thinking if the long-term chart is showing more highs coming, but the shorter charts are basically saying there's profit taking going on currently, but after the profit taking, yes, the long-term chart will be correct. You could short, okay, the daily chart or take an option play to hedge your long position. You could do that. All right. It just depends on what your overall goal is. Are you want to stay in that long term, or do you want to exit the long-term position and just take a short on the lower time frame? And then when that is done, go long again. All right. So there's lots of ways to do it. I'm not saying necessarily that you can't do what you're saying, but it gets sometimes you can get very convoluted that way. So just be careful and kind of know what your intentions are. Hopefully that helped. All right, let's take a look at the energy sector with XLE. All right, so here we are on the energy sector here. All right, what do we got cooking here? All right, XLE still moving up. All right, I think we got now, yeah, we got a green owl now on the back on the weekly chart. Let me just open up that weekly chart. Should be kind of reflective of USO to some degree. Okay, so moving up probably, that's a messy chart. All right. Pretty difficult to make an Elliott wave count out of that right now. Maybe a top here, ABC, going up here. And again, you've had 1, 2, 3, 4, 5 pyramids in a row. So that's a little late to get in on a trend. We don't like to get in on anything after 4. So when you got 4 on the daily and bearish divergence building on the 60, I don't think I would do it. Okay. And it's kind of roly-poly. All right. It really hasn't committed itself. So I kind of would not do that. I think USO would be a better one. But you got to wait for the USO to pull back too. All right. Anything else? Going once, going twice. Now let's look at gold. Now gold, this is the ETF for gold called VLD. Pretty simple, right? All right. So we're showing another high coming on gold based on the PTF on the weekly chart. Now, if we open up the weekly chart, okay, we're going to see a couple things here. One is the owl was highest here back in 2011, and that was a wave 3 high. Then we had an ABC wave 4 correction that took a long time, almost 5 years. Then we started working our way out of that and kind of a little messy, and then started to perk up, made another high for wave 5, turned the PTF green, which indicates one more high. You're still in wave 5. I don't think gold, and this is kind of a strange thing, even if the market sells off, I think gold will go higher, and certainly higher than the PTF high, which is above, well, let's just say about 200. But I don't think it's going to go much higher than that, maybe 205. So I don't see a lot of room left in gold, even if the market sells off. So that kind of is something unusual, because usually gold takes off because it's a metal, it's a place that people move their money for safety when the equities aren't looking so good. So I'm not seeing that happen. So if the market sells off big time, gold will go up a little, but I don't think it's going to go as much up as maybe the cryptos or silver. Okay. I think those markets have a lot more room to go up. So I'm not 100% crazy about gold right now. Okay. And yes, that could be close to a double top, except the PTF indicator over here is indicating there's a 75% probability of one more high. Otherwise, I'd say yes, double top. So this is basically, we'll see if we take out this low. It could come down to this little area here. Those 2 blue lines there, which is 171 to 165, and probably get a rebound back one more high. And I would imagine that will turn the PTF to a neutral, and that'll be the end of it. We almost have a triple top here. Look at this. 1, 2, 3, right? On the weekly chart. So I'm not that crazy about gold. Not that crazy about it. All right. Everybody exactly right. Close to a double top, almost a triple top in some cases, right? All right. All right, Thaddeus, I did Disney. You got that, right? I think I did Disney, didn't I? DIS. Maybe not, maybe I didn't. Okay, let's take a look at Disney. All right, let me take a look here. I think those just came in. Okay, so Disney is one we actually like. All right, we looked at this last week, and now things are turning better. Okay, we've got a pyramid trading point that occurred since last week to the upside. That's bullish. We've got a green owl. We've got green over here. We're still going against the long-term trend here, but there's enough bullishness on the short-term time frames that make an early entry into at least a counter trend trade here. So I'm going to put Disney, and we already looked at this, Disney on the buy list. And basically, I think 97 to 105 short term, maybe 123 to 148. Okay. All right. So let me see here. SOFI. I don't think we looked at that one yet. All right. So SOFI has tanked. All right. So let's see what we got cooking. Well, isn't this interesting? Okay. So SOFI hit the target zone and the PTF turned yellow in that time frame. So that would have been a good reason to scale out of. Okay, you should be able to hear me now. Okay. Sorry about that. I actually, that was my fault. I actually hit a button that I shouldn't have hit. All right. So back to SOFI here. So SOFI hit the target zone and the PTF went from a green to a yellow. So I scale out when I hit a target zone and that happens. So the only reason why I wouldn't have left this entirely is because I still have a green PTF over here. So that's indicating here that this pullback, all right, so far is profit taking. Now look, it's very close to going red. So as soon as that goes red, all right, I'm probably going to get out. Now, my stop right now currently is under this pyramid. So no matter what, I get out there. So scale out, take a look at the short-term PTF. If it's green, keep maybe some of your positions on and do it that way.
No worries.
Okay. So let me ask a question. I was just told the audio is not working. Is the audio working or not? I'm not going to go on until the audio is okay. Testing 1, 2, 3. No audio now. No audio? I'm getting audio. So the audio is okay, right? Gene, I think something's happening on your end specifically because I think the audio is okay. All right. So that's the way I would play this. Okay. Don't go in it now. Okay. Okay. Audio is all good. Okay, good. Don't you just love the technology? All right. So, okay. Eleanor, FUTU. I'll tell you, the last two sessions we've had, it's been kind of wonky with the technology. We have not usually, we never usually have a problem. So that was kind of unusual. There must be some conflict. You know, I updated my Windows. There may be a conflict with certain things. It's always difficult to know exactly what the cause is sometimes. All right, so let's see what we got cooking here. All right, so we've got a bottoming motion going on the weekly chart. See it right here? Green PTF. So green PTF is basically saying this is going to go much higher. And we don't have any more active pyramids to the downside. So the short trades were stopped out. So we've got a situation here where we have a pull up here, but a red PTF here. Okay, so here's the deal. All right, it's pulling back. And notice the 60-minute chart on the far left basically is telling us, because there's so much red down here, the pullback is not over. right? So once the pullback is over, this chart with all the green on it, and this chart is saying we're going to go higher. So this one should go on a watch list. Do not take it now because we want to wait for the 60-minute chart to be bullish. So wait for the pullback to subside, and then we'll look to go long. So let's keep an eye on this and make sure, bring this up again next week, okay? All right, let's see. Let me see if I missed anything here. And Eleanor, that was for you. Thank you. All right, you all are great. Thanks for hanging with us. All right, okay, anything else? I think I'm caught up. Anything else? Let's take a look. Why don't we let's take a look at two more ETFs. I want to go to the real estate market for a minute. This one's kind of an interesting situation right now. Interest rates have gone up and we've seen the REITs come down, right? So what's interesting with this is even though it's come down quite a bit on the weekly chart, the PTF is still green. So that's indicating that eventually we're going to make higher highs, which means real estate is going to come back. Short term, however, all right, it's kind of looking a little messy. So if we go to the 60-minute chart, we have a red PTF in red. So it's coming down right now. And it's showing that this low here at 104, which is right around this low here on the daily chart, is going to be taken out. So kind of interesting. All right. So what we really are going to want to do is see if this bottom here, let me put a horizontal line up there for it, is going to hold. Right? So that'll be interesting to see. So I think real estate's going to be rocky short term. Now, the other one I want to look at is cryptos for a minute. Let's look at Coinbase. All right. Again, bullish on cryptos. There's some profit taking coming in. And I don't believe we're going to go below this bottom here, especially with a bullish PTF on the daily. We had the red PTF indicating the correction, still moving down. So probably a little further to go. But it's pretty close, I think, to getting to the inflection point. So I'd wait for the 60-minute chart to turn bullish and go into that. If you're already in it, just stay in it because I think this long term is going to be okay. All right. Let's take a look at GBTC. GBTC is the Bitcoin ETF, and now it's a buy again. Okay. So we're bullish on this long term. All right. This price bar caused a lot of angst because we had our stop under here. So we stopped out and now long again. Kind of an anomaly, but that's what you get. Now, you see this kind of price bar? I don't know if you've ever heard me talk about risk control, but there's two types of major risks you got to be careful about, okay? You've got to be careful about market risk and trade risk. Market risk is something we really cannot control as traders. It is events that occur outside the normal scope of what we would calculate stops to be and so forth. Things like terrorist attacks, big news events coming out of nowhere. And so they can cause markets to gap or move quickly against us, like that price bar. So the only way you can protect yourself with that, of course, is to have your stop in place so it's not a disaster. But also, this is why you want to trade with money you can afford to risk. Because even if you had your stop carefully chosen up here or here and you got out, all right, that's fine on this. But if it was a gap, that could hurt you. All right. So always use risk control. It'll keep a disaster from being a disaster. It will just keep it a more tame loss, so to speak. But I'm good to go back in it. Okay. So I'm going to put GBTC back in for a long-term buy, and we expect this to maybe take out the all-time high eventually. And this is where I think money's going to go if the market sells off. I think money's going to go in here. Okay, and here is RIOT. The other reason, very bullish on this one too. Okay, except it's still in a pullback here. So don't go in it yet. Wait for the pullback to subside. If you're in it, have your stop under here. So the cryptos are kind of an interesting thing because as more and more government regulation on currencies and things like that come into place, one of the reasons the cryptos got so popular is because they were private. I'm not so sure really how private they really are, but that was the conception at first. And so people wanted to go there because they didn't want prying eyes looking at what they were doing. So kind of interesting. All right, let's take a look at NKLA. All right, on the real estate, those real estate ETFs I showed you were residential. All right, so let's take a look here. All right, so we are popping up, we're pulling back. I think the pullback is going to be pretty over soon. Notice it hit the inflection point. So here, when we looked at this, we said, okay, it's pulling back. It should get into this area. So it got in there, and it looks like the PTF just turned neutral on the 60-minute chart. And the momentum is starting to increase to the positive side, but do not go in it yet, okay? We want to make sure the correction's over, and it looks to me like it may not be. What I like about this for the long trade on this is that we have a green owl now on the weekly chart. So if you're long on this first leg up and you took profits here, okay, but be ready to get back in, all right, because I think this is gonna surge again upward quite a bit. It's had its first leg off the bottom. You usually get a big pullback off that. So that's what you're seeing now. Sometimes this pullback can come all the way to the bottom and form a double bottom. So you got to be careful about that. So keep your stop at the bottom. If you got in off the first pyramid, remember I told you stop at the bottom and stay with it. Okay. All right. All right, let's see. Stock I own, total value 19K, shows a loss. And the broker said it got delisted. It is no longer. Well, what happened to your $19,000? It's got to be someplace. It may be delisted, but check the pink slips. So you need to make sure you know how you can look it up. Okay, your broker can help you that. All right. I'm sure they didn't steal your money. Okay, anything else? Anybody else? Stocks do get delisted. Now, if it goes bankrupt, that's different. Okay, but delisting is not necessarily bankrupt. But ask them and see. Okay, anybody else? All right, I think we're good. Let's roll over and see what the day trading time frames. TLT. I looked at TLT, Al. Okay, TLT, I'll look at it again real quick. You must have come in late today. TLT is one that, I was saying a lot of the pundits are saying buy TLT, the bonds. And we have been not buying it because of the red PTF, right? So that is the problem, okay? So definitely it's coming down. We still have a red PTF on all the time frames. So there's absolutely no reason to be buying this right now. In fact, it looks to us like it's going to make one more bottom. The bottom's not in yet. Okay, so definitely be careful with that. All right, now I'll go over, Alexander's saying go over the futures. Okay, let me go over the futures here. All right, so here's MGC, okay, which is the micro gold futures. Okay. Let's see what's cooking on that this morning. A little messy here at the open. A little bit of a short trade here. Let's see what else is out there. Let's see what the MES is doing here. All right, so the MES pulled back to an inflection point and is now going up. It's kind of messy though. We're assuming that this is a bottom here. So I'm kind of liking that. We went above here. You could have bought the breakout here, okay? Or you can wait for the next bullish pyramid because this will probably pull back, form a bullish pyramid, and then go. And I think your target is going to be up there. I think this may be a major bottom. If you open up this, you can see this has been coming down for a long time. So this could be a big bottom here, okay? And we have green over here. So if you go in now, stop's got to go at the bottom of this area here, okay? All right, take a look at the M2K. This is September 23 contract. Not much different, okay? Bullish as well. Green PTF, green, 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 green. Again, pulling back a teeny bit now. All right, so if you want to wait for a bullish price bar to come back, you can do that. But if you wanted to go in and put your stop under this bottom here, you could do that. And I think probably at this particular point, let's just run a couple fibs up here. I don't think this is a major retracement here. I think it's just a little bit of a pullback. I mean, it could come down to 1930, but I think eventually it's going to 1938, okay? All the way up to 1945. That's a 1 minute time frame. That's pretty quick. All right, that is, thank you. You have a good weekend too. Okay. All right, so that's kind of red pyramids on the 1 minute. Yeah, but they've been stopped out. See, that was for the short trade here. Now you've got a green one coming up. Okay, so you're good. You could take a long position. All right, my pleasure, everybody. So listen, we'll try to get the kinks worked out so we don't have any of these technical blackouts. We'll have to get a hold of StreamYard, who we use for this service, and find out. There must be some conflict in some of the software that we have that's not agreeing with them, because I never get a crash except for when I'm on StreamYard. So kind of not sure about what's going on with that. All right, so thank you, everybody, and we'll see you back here next week. Good session. Thank you. I'll leave this here, and I'll put a little music on for 5 or 10 minutes or so, and then we'll end the session.